All right, let's talk some stocks here as we take a little breather from the FOMC chat and pre-NVIDIA. Tech bulls were reminded yesterday, though, that the market's going to be combing through the numbers with a fine brush. Joining me, Lee Munson, after Palo Alto got hit on earnings. A little bit of recovery intraday yesterday, Lee, but down again. Welcome back to the show, Mr. Munson. Tell me what you think about the market's reaction to Palo Alto, if this is a stock that can catch itself.
Well, I'm glad it wasn't worse. When I got in yesterday morning, I was upset. I think I yelled at my analyst Jesus. I said, we should just sell it all. I'm impatient. I don't have time for this. You know, you compare it to a stock like CrowdStrike that's just going up all year. The problem is that's the time when you remember things that Warren Buffett would say that, if you've got a good company and you think the prospects are good longer term, you should rejoice that the street doesn't get it. Here's how I read it. Once I got in, I had my coffee and I went through the numbers and really started listening to what the CEO was trying to convey. We have an issue where when money's cheap, people just pay up front to get the best pricing from Palo Alto. And now that the cost of money is up, people are not paying up front. They want to have terms, they want to pay, they want to have some deferred contracts over time. And so the revenue numbers came in weak. That's what the reaction is. And revenue numbers, they're just like an EPS. It's just this number. People want to see them higher, and they want to see them higher by a lot. But then when you dig in and look up other metrics like RPO, which really it's how much is left on the contract. Are we getting big contracts in, regardless if people are paying a lot of revenues now? How much is the contract worth over time? When I started peeking in that and really getting the elbow grease out, I thought, this quarter isn't actually that bad. In fact, it's a bit ahead of what I thought based on the disaster 3 months ago. So I made a basic business decision that I'm not buying more, but I'm certainly not selling. Okay. And I think that I'm very comfortable, and I'll tell you why. I think a lot of investors are just frustrated with this company because they're trying to build something long term. They're trying to integrate these different little parts of their business. They're trying to create a platform, which is kind of a holy grail, and they're trying to figure out how to get more value. And it's in the past, in a rearview mirror, that they're saying, hey, people don't want to pay more because they're not seeing evidence of more value. So my challenge is, well, then show me some more value. The best easy way is to package things up, get a total solution for IT professionals, and have something robust that, ties all these things together. So, you have to take time. It's hard to be patient. I don't like it, but sometimes you have to have a cooler head, and that's what we decided yesterday.
Well, they still have plenty of top-line growth. I mean, they've been hitting 20% pretty consistently. Do you think there's any tie-up potential if they need to bolster their offerings? And if some clients now are maybe trying out how to program things on their own with AI tools, is there an outlet that involves either deal activity or potential takeout? Do you think Palo Alto lives on its own, or is there a potential for M&A?
Well, I think Palo Alto should be looking to bolt on some things, but that's, I'm not the expert on that. I think Palo Alto is going to be a freestanding place for some time. They control over 20% of this area, and I think that they're the 800-pound gorilla that, they need to grow into that space. I don't think that AI, here's what I think about AI. AI is going to make it easier to have major breaches at big companies, of which those IT people are going to, the CIOs or the CTOs are going to be running back with their tail behind their legs, looking at Palo Alto saying, we want to pay you a bigger amount of money to solve this problem. Sure, the other thing that I liked in management notes, and by the way, the company grew some revenues at 16%. It's not like we're growing at 7 or 8% like, a few companies that are the largest on the planet right now. They're still breakneck pace. But the comments they were talking about is rolling out some products for this big AI build-up. If you run a major corporation, do you want your people, your employees, just on AI willy-nilly, or do you need some custom solution so that people can be on AI and not have more breach, more problems?
True,
so I think that's really where the opportunity is going to be.
All right, like it. All right, so sticking with it, had a second thought, but after the coffee kicked in, you're still a Palo Alto bull. Lee, we got another one of your favorites coming up in the earnings around the corner, Decker Outdoors. How are they going to fare in this kind of retail pinch a little bit, where we've seen consumers this past quarter drift a little bit more towards the cheap side of things?
Yeah, so I'm long Decker. I love it. I love Uggs in the winter. I love Hoka shoes in the summer. Here's the deal. It's all about Hoka. It's about a third of the revenue, about $400 million in sales. There was concerns. There was a thoughtful analyst like a month or so ago that downgraded it. He said, we're seeing some internal credit card sales lower for Hoka. The whole Decker story has to do with direct to consumer. And right now, Hoka, a large minority of their sales are direct to consumer. And that's a code word. When you hear DTC in retail, that just means fat profit margins, don't cheapen the brand, the highest average unit price, right? That's the holy grail. That's how you get a better multiple. That's how the stocks go up. That's how you avoid being Macy's. And so what I'm worried about, even though I'm long, I'm worried about the average sale price going down. I'm worried about promotions and discounts. But I was in the Glendale, California mall. Don't ask why. I was at a music festival. I needed to buy some new Hoka shoes. So I'm in Glendale, and I go to the Nordstrom's, and I asked the nice young kid there, what sells the best here? And he said, oh, half of everything are those shoes over there. You mean the Hoka shoes? Because you have all these shoes, but this is what everybody wants? Yes.
And they're killing it.
They're not discounting them at Nordstrom's. So, channel checks are important, credit card receipts are important, but it's a lattice work. You have to look at a lot of different things. And sometimes as an investor, you just got to get out of the office. You got to go to the mall, and you got to pester
channel
the shoe
checks.
sales at Nordstrom's.
Yeah. Hey, I got my mom some Hokas. She says the best shoe ever. Thank you, Lee. Appreciate the catch up.
I love them.
All right, earnings around the corner. Lee Munson, President, CIO at Portfolio Wealth Advisors, looking for Palo Alto to hold on, and for Hokas in the summer, Uggs in the winter to prove out Decker's earnings.